market recap for March 13th, 2025. Today, we once again played bearish. We reacted off of this daily fair value gap. Well, obviously bearish, as you can see, but we had a very, I'd say, very high volatility day, like which went up and down and up and down. There was no real trend today. So, what I have to say about that is it's PPI, right? It could be something else, but it's most likely PPI and just news. But like I said, could completely be something else. Now, today, as you can see, we were playing bearish because London session played bullish and then reversed, reacting off. Well, we're on the hourly, so we'll go over the hourly. We take out this low here, wick down a little bit, and then come up and retrace that. We also sweep this low down here. I don't know why that popped up. This low down here, and then we retraced up from there. Both of these were shallow sweeps that could have been traded off of. And they, not all of them, but they had SMTs that were tradable. So now in this 15, you can see consolidation to a bullish move, switching to bearish right at the end, meaning New York is going to continue that bearish trend, as well as this 15-minute fair value gap over here that gets respected perfectly with these closures. Drop down, up one more time for market open. Boom, another 15-minute here, perfect with this wick up there and this low, or the high of this wick here. Then we push down, take out these lows once again, sweep it, but don't close very far. Come all the way back up into this 15, and then we come all the way down, sweeping these lows again, shallow, up. Last hour of trading, touches untouched liquidity after this high here, back down, close within this 15-minute here, back up. Very just back and forth, back and forth. So trend today was bearish, but as you can see, there wasn't many clean expansions. There wasn't, expansion, retrace, expand. It was just like a slow trickle all day is what it seemed. So after we're bearish because of this stuff, I'm not going to touch on that again, but you can see these highs here. Boom, market opens here, right? This candle, why is this on the wrong candle? I'm confused. Is this trying to catch this range? I think it is. Where's the opening range gap then? I don't know. Scratch that. 930 is here. Right, we took out these highs beforehand. This is an SMT here, I believe. We then took off to the downside. Maybe this is, well, it's on the 1 minute anyways. So we took off down here, shallow sweep, up, retrace to here. This is a very deep retrace. It's not my favorite, but it happens during the macro, so that makes sense. It's also an early retrace for when we started the move. And in my mind, it's kind of an unnecessary one. It's rare that we sweep so shallow here this early in the day and don't completely reverse. We just retraced. There were signs that this would happen within price. Again, shallow sweep, SMT in the macro. So we come up, respect this 15-minute with these closures here. Not sure what we're wicking up to, but then we expand lower once again, continuing the bearish trend. Lunch consolidates, tries to take out a high, fails, continues the move down to this low, down here once again, shallow sweep, SMT on the 1 minute super low time frame here, play that bullish, take out this high here. And so at this point, the only untouched liquidity is sell side. So we just come clean up all of this before closing. Now on the 1 minute, there were a couple things that tipped the markets the way they went. So to start, pre-market, right, 10 minutes before market open, we had an SMT, which sets us up bearish for the day. Now, personally, I was bullish because, why was I bullish? Let's go over that. I was bullish because this retrace here, right? This low here was right in the middle of a 1 hour fair value gap. So what I thought is, boom, we came up, needed to retrace for a London session, and then New York would start playing bullish from there. In hindsight, that is very stupid. If we took out this high, that would make sense, just like earlier in the week. But we didn't take this high. We, in fact, just filled in an inefficiency and then continued bearish. We also reversed during a London session, which is a sign for New York to continue it. So looking back, playing bullish today was very stupid. But at the time, I really couldn't tell. I felt like it could go either way. But in the future, now I learn, right? We make those mistakes and we learn from them. So that higher time frame playing bearish, as well as this SMT here, we let market open, kind of does a whole lot of nothing, right? And since we are bearish at this point and NQ made this higher high, we're then looking to take the trade on ES, right? Because ES, by failing to take this high over here, is showing that weakness. So there were trades on that could have been taken to target lows. That would have worked. That would have hit. After seeing this and how shallow it was during the macro, at least going to get a retrace of some sort, because this is a big expansion just for the macro to, I'll say, continue the move. Because we technically started this move pre-market. A couple minutes, but still pre-market. So we reverse here, SMT of these lows. That's where you go on a 15-second and find an array. Well, first, so you see this SMT, you have a higher time frame bias. You wait for a 15-second change in the state of delivery, also known as a market structure shift if you're an ICT guy. And then you look for an array, so a fair value gap order block, preferably fair value gap. That's just what is most common to take you higher. And then once again, SMT up here. Probably wouldn't have taken this short from here for many reasons. One being this is a very, very high retrace for my liking. Two, I don't see a reason for this candle to wick all the way up here. Just found one, but not sure why it would carry all the way through. All right, if we look, this is an inverse. Validated here, down, touched once again, twice. Boom, we react off of once again, close within this 15-minute. So with the closure of this and this huge rejection, we could say, oh yes, that is obviously retracing with that SMT. But we also could have not. Now this one with this SMT, since NQ made a lower low and ES made a higher high, of course we're still bearish on the day because that's a higher time frame thing, and we saw nothing here that would turn us away. We had an expansion. We swept liquidity, and it's time for a retrace. Just because it went up higher doesn't change our overall bias. So we hit that, see an SMT, wait for a 15-minute change in the state of delivery. Now, this isn't a time I'd like to take a trade. I'd preferably wait for around a macro or something like that. But if the market's presenting something, it's presenting something. So this isn't something I would take just because it's out of my, I'll say, comfort zone with respect to the time. But it would have hit. If you take shorts there, it would have been slow, but it would have worked its way down below these lows. So lunch hits and we kind of consolidate for about an hour. And then, I forgot all the macros. That's okay, you can eyeball them. Macro here, with this retrace down. Next macro is within this consolidation right here. Boom, this retrace there. Fair value gap pushes us up. Once again, failure to make a high. Failure to make a high here. Right, so we tried, failed. Now we resume that bearish trend, looking to take out this low. Get it, consolidate, do a little bit. Algorithm kicks back in, takes out opposing liquidity first. We get an SMT. So three things are the reason I would play bullish now after taking this low. One, it's shallow. All right, it's a shallow sweep. We hit it and then we lose all energy. Two, After the algorithm kicks back in, the first thing we do is seek sell side liquidity, which is usually, unless we're heavily bearish, after the algorithm kicks back in at 130, price usually sweeps opposing liquidity before moving in its actual direction. All right, so we get an SMT down here, and then on the 1 minute time frame, we have this fair value gap here. Price sweeps here barely, retraces, perfect here. We get that. We could see this reaction here and then possibly find a change in the state of delivery on the 15-second. If you're not too confident, this would reverse. I am personally not a fan of how this high was just completely rejected after sweeping it. So I might have waited to see a confirmation on the 15-second before entering this. But you would have rode that against opposing liquidity up to here. Then once again, 3 o'clock, we took out this high, right? These highs over here. So from there, untouched liquidity, last hour of trading, bearish, right? Lows all throughout here, failing to get to these, but trying very hard. And then obviously coming up off of that to close in the middle of the range for that. So CPI and PPI, my review is it's tradable. CPI and PPI days are tradable. It takes more finesse to do so, and it can really mess you up. Today and yesterday, I both lost. Yesterday was more of a technical thing. Today, my bias was just incorrect, but looking back, I really don't know what I was thinking. Today, 100% should have been bearish. But like I said previously, we just take that into the future and hope to learn from that mistake. So going into Friday, if we look on the weekly time frame, super small wick, right? We're already at 30% retraced for the week. So I'm looking to see another bearish expansion. We now closed below this. We didn't, we put a candle in it. We closed below this, rejected off this. The fact that we're playing bullish now makes me think that we're going to play bearish tomorrow. Not much to retrace within here because it's all just wicks. Now, gaps here, tiny wick. I think we're going to continue bearish. There's relative equal lows down here. There are relative equal lows up here. But if we're continuing this move down after retracing 30% of the weekly range like we already have, continuation is the most likely thing. However, if London session presents something different and pre-market presents something different, we will play off of those and not our guess, our prediction, right? Like I say every day, we make predictions so that we have quick reactions to price, but overall, our decisions are based off of our reactions to price, right? So keep that in mind. You can make all the predictions you want, but make them loose. Make sure your predictions align with what is actually happening in the markets and you're not just hoping. So with that being said, this has been your market review for March 13th, 2025.